Question 1. John Smith is purchasing a commercial property insurance policy in Hawaii. During the underwriting process, the insurer requests additional information about the property's fire suppression systems and electrical wiring. This is an example of A. Policy provisions, B. Underwriting considerations, C. Exclusions, D. Insuring agreements. Answer: B. Underwriting considerations. In Hawaii, underwriting considerations involve the evaluation of risks associated with insuring a property. Insurers assess factors like fire safety measures and building infrastructure to determine the premium and coverage terms. This process helps insurers understand the risks involved and ensure the property meets safety standards, influencing the policy's cost and coverage details. Policy provisions refer to specific terms within the insurance contract, not the evaluation process itself. Exclusions C. Are specific situations or perils not covered by the policy, while insuring agreements D. Outline the insurer's promise to provide coverage under specified circumstances. Question 2. Which of the following is typically covered under a standard homeowner's insurance policy in Hawaii? A. Earthquake damage, B. Flood damage, C. Windstorm damage, D. Mold damage. Answer: C. Windstorm damage. In Hawaii, homeowners' insurance policies typically cover windstorm damage as it is a common peril in the region. Earthquake damage A and flood damage B are usually excluded from standard homeowners policies but can be covered through separate policies or endorsements. Mold damage D may also be excluded unless caused by a covered peril like a burst pipe. Understanding these exclusions and additional coverage options helps homeowners in Hawaii protect their properties against specific risks relevant to their geographic area. Question 3. Scenario: Emily Davis, a resident of Hawaii, rear-ended another vehicle while driving on the highway. The other driver suffered injuries and is now suing Emily for damages. Which type of insurance policy would typically cover Emily's liability in this situation? A. Homeowners insurance policy, B. Personal auto insurance policy, C. Umbrella insurance policy, D. Workers' compensation insurance policy. Answer: B. Personal auto insurance policy. In Hawaii, personal auto insurance policies typically include liability coverage that protects insured drivers against claims for bodily injury or property damage they cause to others. This coverage extends to incidents like rear-end collisions where the insured driver is found legally responsible for the damages. Homeowners insurance primarily covers property and liability related to the insured's home, not vehicle-related incidents. Umbrella insurance C provides additional liability coverage beyond the limits of primary policies, including auto insurance. Workers' compensation insurance D covers injuries to employees arising from work-related activities, not liability from driving incidents. Question 4. Which of the following is an example of a policy endorsement in a Hawaii property insurance policy? A. Exclusion of flood coverage, B. Valuation of insured property, C. Addition of earthquake coverage, D. Deductible amount. Answer: C. Addition of earthquake coverage. In Hawaii, a policy endorsement refers to a modification or addition to the standard insurance policy terms. Adding earthquake coverage, C, through an endorsement allows policyholders to extend their coverage beyond what is typically included in a standard policy, addressing specific risks relevant to Hawaii's geological characteristics. Exclusions, A, specify what perils are not covered by the policy. Valuation, B, and deductible, D, are aspects of how claims are processed and paid but do not involve modifying the coverage itself through endorsements. Question 5. Which statement regarding the underwriting process in Hawaii is correct? A. Underwriters determine claim settlement amounts. B. Underwriters evaluate risk to determine policy premiums. C. Underwriters negotiate terms with policyholders. D. Underwriters handle claims investigations. Answer: B. Underwriters evaluate risk to determine policy premiums. In Hawaii, underwriters assess risks associated with insuring a property or individual and determine the appropriate premium based on these evaluations. This involves analyzing factors such as the insured's history, property details, and geographic risks to establish the cost of coverage. Underwriters do not determine claim settlement amounts. This task falls to claims adjusters. Negotiating policy terms. C. And handling claims investigations. D. May involve other roles within the insurance process but are not primary responsibilities of underwriters during the underwriting process. Question 6. Scenario. Jennifer Lee, a small business owner in Hawaii, discovers that her business property has been damaged due to a recent storm. Which method of loss settlement is most likely to be used by her property insurance policy? A. Replacement cost value. B. Actual cash value. C. Agreed value. D. Market value. Answer A. Replacement cost value. In Hawaii, property insurance policies often use replacement cost value as a method of loss settlement. This method reimburses the insured for the cost of replacing damaged property with new items of similar kind and quality without deducting for depreciation. Actual cash value. B. Considers depreciation and pays for the replacement cost minus depreciation. Agreed value. C. And market value. D. Are methods used in other types of insurance policies like marine or antique or financial agreements but are less common in standard property insurance in Hawaii. Question 7. Which of the following best describes the purpose of an insurance policy's declarations page in Hawaii? A. It outlines the insured's responsibilities under the policy. B. It lists the perils covered by the policy. C. It summarizes key details about the policy and insured property. D. It specifies the conditions under which the insurer can cancel the policy. Answer. C. It summarizes key details about the policy and insured property. In Hawaii, the declarations page of an insurance policy provides a summary of essential information including insured parties, covered property, policy limits, and deductibles. This page serves as a quick reference guide for policyholders detailing the specifics of their coverage without delving into the full policy text. Option A refers to policy conditions, while B relates to insuring agreements typically found elsewhere in the policy. Option D pertains to cancellation provisions, which are part of policy conditions rather than the declarations page. Question 8. Scenario. Michelle Wong, a homeowner in Hawaii, experiences a burst pipe causing significant water damage to her property. Which type of insurance policy would typically cover the cost of repairing the damaged pipe? A. Homeowner's insurance policy. B. Flood insurance policy. C. Earthquake insurance policy. D. Umbrella insurance policy. Answer 8. Homeowners insurance policy. In Hawaii, homeowners insurance policies generally cover sudden and accidental damage to the home and its infrastructure, including plumbing systems like burst pipes. Its coverage extends to repair costs associated with the pipe itself and damage caused by the resulting water discharge. Flood insurance, B, is necessary for coverage against flood-related damages, which are typically excluded from homeowners policies. Earthquake insurance, C, is required for earthquake-related damages, and umbrella insurance, D, provides additional liability coverage beyond primary policies. Question 9. Which of the following is a key consideration for insurers when determining workers' compensation insurance premiums in Hawaii? A. Age of the insured employees. B. Size of the insured business. C. Industry type and associated risks. D. State sales tax rate. Answer. C. Industry type and associated risks. In Hawaii, insurers calculate workers' compensation insurance premiums based on the specific risks associated with the insured business's industry type. High-risk industries, such as construction or manufacturing, typically have higher premiums due to increased likelihood of workplace injuries. Factors like the insured business's size, B, and age of employees, A, may influence premium calculations indirectly but are less significant compared to the inherent risks associated with the industry. State sales tax rate, D, is not directly related to workers' compensation insurance premiums. Question 10. Which of the following statements regarding liability coverage in Hawaii auto insurance policies is correct? A. Liability coverage is optional for all drivers. B. Minimum liability limits are mandated by state law. C. Liability coverage only applies to damage to the insured vehicle. D. Liability coverage includes coverage for uninsured motorist claims. Answer. B. Minimum liability limits are mandated by state law. In Hawaii, auto insurance policies must include minimum liability coverage limits as mandated by state law. This coverage provides financial protection against claims or lawsuits for bodily injury or property damage caused by the insured driver. Option A is incorrect, as liability coverage is typically required by law, not optional. Option C is incorrect as liability coverage pertains to damage caused to others, not the insured vehicle itself. Option D is incorrect as uninsured motorist coverage is separate and not part of liability coverage. Question 11. Scenario. Mark Taylor operates a small landscaping business in Hawaii. One of his employees, while operating heavy machinery, accidentally damages a client's property. Which type of insurance coverage would typically cover this scenario? A. Commercial property insurance. B. General liability insurance. C. Professional liability insurance. D. Business interruption insurance. Answer. B. General liability insurance. In Hawaii, general liability insurance is designed to protect businesses like Mark's landscaping company from third-party claims of bodily injury, property damage, and personal injury. This coverage extends to incidents where employees cause accidental damage to client property while performing work duties. Commercial property insurance primarily covers damage to the insured business's property, not third-party liability claims. Professional liability insurance C. Protects against errors or negligence in professional services, and business interruption insurance D. Covers income loss due to a temporary shutdown. Question 12. Which of the following factors is typically considered during the valuation of insured property under a Hawaii property insurance policy? A. Historical significance of the property. B. Current market value of the property. C. Replacement cost of the property. D. Cost of property maintenance. Answer. C. Replacement cost of the property. In Hawaii, property insurance policies often value insured property based on its replacement cost, which refers to the cost of replacing damaged or destroyed property with new property of similar kind and quality. This valuation method helps ensure that policyholders can fully restore their property to its pre-loss condition without accounting for depreciation. Historical significance A and current market value B are not typically used for valuation under property insurance policies. The cost of property maintenance D is unrelated to the valuation method used in property insurance. Question 13. Which of the following best describes an insurance policy's endorsement in Hawaii? A. It modifies the policy's terms and conditions. B. It specifies the insured property's market value. C. It lists the covered perils under the policy. D. It determines the deductible amount. Answer A. It modifies the policy's terms and conditions. In Hawaii, an endorsement in an insurance policy refers to a document that modifies or adds to the terms and conditions of the original policy. Endorsements can be used to broaden or restrict coverage, add additional insured parties, or clarify specific aspects of the policy based on the insured's needs. Options B, C, and D are incorrect as they refer to other aspects such as property valuation, covered perils, and deductible amounts, respectively. Question 14. Scenario. Sarah Johnson, a homeowner in Hawaii, experiences damage to her roof due to a severe storm. After filing a claim with her insurance company, the adjuster determines that the damage exceeds the policy's coverage limits. Which insurance coverage option could have helped Sarah avoid this situation? A. Scheduled personal property endorsement. B. Guaranteed replacement cost coverage. C. Actual cash value coverage. D. Personal liability umbrella policy. Answer. B. Guaranteed replacement cost coverage. In Hawaii, guaranteed replacement cost coverage provides additional protection beyond the policy's standard limits, ensuring that the insured can repair or rebuild damaged property to its original state without being subject to a maximum limit. This coverage option is beneficial in scenarios where unexpected expenses exceed typical policy limits, as in Sarah's case. Scheduled personal property endorsement A covers specific high-value items separately. Actual cash value coverage C considers depreciation, and a personal liability umbrella policy D extends liability coverage beyond primary policies. Question 15. Which of the following is a primary role of Hawaii's insurance department in regulating the insurance industry? A. Setting insurance policy premiums. B. Approving insurance policy endorsements. C. Licensing insurance producers. D. Investigating insurance claims. Answer. C. Licensing insurance producers. In Hawaii, the insurance department plays a crucial role in regulating the insurance industry by licensing insurance producers, including agents and brokers. Licensing ensures the producers meet state-mandated qualifications and adhere to ethical standards when selling insurance products to consumers. Setting insurance policy premiums is typically determined by insurers based on underwriting criteria. Approving insurance policy endorsements is part of the insurer's responsibility, not the insurance department's. Investigating insurance claims is handled by adjusters and insurers rather than regulatory bodies. Question 16. Which of the following statements regarding casualty insurance in Hawaii is correct? A. Casualty insurance covers damage to property caused by perils like fire and theft. B. Casualty insurance is primarily concerned with liability risks. C. Casualty insurance policies do not include exclusions. D. Casualty insurance is not required by law in Hawaii. Answer. B. Casualty insurance is primarily concerned with liability risks. In Hawaii, casualty insurance primarily covers liability risks rather than damage to property caused by specific perils like fire or theft. Covered under property insurance, casualty insurance protects policyholders against legal liability arising from injuries to others or damage to their property caused by the insured's actions or negligence. Option A is incorrect as it describes property insurance coverage. Option C is incorrect as casualty insurance policies do include exclusions for certain perils and circumstances. Option D is incorrect as some forms of casualty insurance, such as auto liability insurance, are required by law in Hawaii. Question 17. Scenario. Lisa Adams, a resident of Hawaii, owns a high-value collection of antique jewelry. To ensure adequate coverage, which insurance option should Lisa consider? A. Personal umbrella insurance policy. B. Scheduled personal property endorsement. C. Guaranteed replacement cost coverage. D. Earthquake insurance policy. Answer. B. Scheduled personal property endorsement. In Hawaii, a scheduled personal property endorsement is designed to provide specific coverage for high-value items like Lisa's antique jewelry collection. This endorsement allows policyholders to itemize and insure individual items or collections that exceed the standard policy limits or require specialized coverage. Option A. A personal umbrella insurance policy extends liability coverage beyond primary policies. Option C. Guaranteed replacement cost coverage applies to property damage repair costs. Option D. An earthquake insurance policy covers damages resulting from earthquakes, a common peril in Hawaii. Question 18. Which of the following factors is typically considered by insurers when assessing risk during the underwriting process in Hawaii? A. Policyholder's age. B. Property's historical value. C. Business location. D. Stock market trends. Answer. C. Business location. In Hawaii, insurers consider the location of the insured property or business as a critical factor during the underwriting process. Business location impacts risks associated with environmental hazards, crime rates, and proximity to emergency services, influencing premium rates and coverage decisions. Optional policyholders' age may be considered for certain types of insurance but is not a primary factor in underwriting commercial or property insurance. Option B, property's historical value, and Option D, stock market trends, are unrelated to property and casualty insurance underwriting in Hawaii. Question 19. Which of the following is an example of a policy condition in a Hawaii property insurance policy? A. Coverage for windstorm damage. B. Exclusion of flood damage. C. Replacement cost valuation. D. Insured's duty to notify the insurer of a claim. Answer. D. Insured's duty to notify the insurer of a claim. In Hawaii, a policy condition refers to a requirement or obligation that policyholders must fulfill under the terms of their insurance policy. One such condition is the insured's duty to promptly notify the insurer of any claims or potential claims. This condition ensures that insurers have timely information to investigate and process claims efficiently. Options A, B, and C are examples of policy provisions, coverage specifics, exclusions, and valuation methods, rather than conditions. Question 20. Scenario. Alex Johnson, a small business owner in Hawaii, leases office space in a commercial building. Which type of insurance would typically cover damages to improvements made by Alex to the leased space? A. Building property insurance. B. Business interruption insurance. C. Commercial general liability insurance. D. Tenants improvement insurance. Answer. D. Tenants improvements insurance. In Hawaii, tenants improvements insurance covers improvements or alterations made by a tenant to leased commercial space. This coverage protects the tenant against financial loss in case these improvements are damaged by covered perils such as fire or vandalism. Building property insurance typically covers the structure owned by the landlord. Business interruption insurance (B) covers income loss due to a temporary shutdown. Commercial general liability insurance (C) covers liability claims for bodily injury or property damage, not property improvements. Question 21. Which statement regarding insurance producer licensing in Hawaii is correct? A. Licensing is optional for insurance agents. B. Licensing requirements are uniform across all states. C. Licensing must be renewed annually. D. Licensing is regulated by individual insurance companies. Answer. C. Licensing must be renewed annually. In Hawaii, insurance producer licensing is mandatory for individuals who sell insurance products or advise customers on insurance matters. Licensing ensures that producers meet state-specific qualifications, including passing exams and completing continuing education requirements. Option A is incorrect as licensing is mandatory, not optional. Option B is incorrect as licensing requirements vary by state. Option D is incorrect as licensing is regulated by the state's insurance department, not individual insurance companies. Question 22. Which of the following is a key consideration for insurers when determining premiums for commercial property insurance in Hawaii? A. Property's historical significance. B. Property's proximity to fire hydrants. C. Property owner's credit score. D. Property's market value fluctuations. Answer. B. Property's proximity to fire hydrants. In Hawaii, insurers consider the property's proximity to fire hydrants and fire stations as a critical factor when determining premiums for commercial property insurance. Access to fire protection services significantly influences the insurer's assessment of the property's fire risk and the potential for extensive damage. Options A, C, and D are less relevant factors in determining commercial property insurance premiums compared to fire protection measures. Question 23. Scenario: James Anderson, a homeowner in Hawaii, has a swimming pool in his backyard. One of his guests suffers a serious injury while using the pool. Which type of insurance coverage would typically respond to this situation? A. Personal umbrella insurance policy. B. Dwelling fire insurance policy. C. Personal auto insurance policy. D. Flood insurance policy. Answer A. Personal umbrella insurance policy. In Hawaii, a personal umbrella insurance policy provides additional liability coverage beyond the limits of standard homeowners or auto insurance policies. This coverage protects insured individuals like James from liability claims resulting from incidents such as guest injuries occurring on their property. Option B, dwelling fire insurance policy, covers specific perils damaging the dwelling itself, not liability. Option C, personal auto insurance policy, covers liability related to auto accidents. Option D, flood insurance policy, covers flood-related damages, not liability claims. Question 24. Which of the following statements regarding insurance policy exclusions in Hawaii is correct? A. Exclusions are included to increase policy premiums. B. Exclusions are typically listed in the policy declarations. C. Exclusions specify perils that are covered by the policy. D. Exclusions vary depending on the insured's credit score. Answer. B. Exclusions are typically listed in the policy declarations. In Hawaii, insurance policy exclusions specify perils or situations that are not covered by the insurance policy. These exclusions are typically listed in the policy declarations or within the policy text to clearly outline situations where coverage does not apply. Option A is incorrect as exclusions are meant to limit coverage, not increase premiums. Option C is incorrect as exclusions specify what is not covered, not what is covered. Option D is incorrect as exclusions are based on specific perils or circumstances, not the insured's credit score. Question 25. Which of the following factors is considered during the evaluation of workers' compensation insurance premiums in Hawaii? A. Employee tenure with the company. B. Type of industry and associated risks. C. Employee's annual salary. D. State unemployment rates. Answer. B. Type of industry and associated risks. In Hawaii, insurers evaluate workers' compensation insurance premiums based on the type of industry and associated risks. Industries with higher injury rates or more hazardous working conditions typically face higher premiums. Factors such as employee tenure, individual salaries, C, and state unemployment rates, D, are less directly related to the assessment of workers' compensation insurance premiums compared to the industry's risk profile. Question 26. Scenario: Julia Miller owns a vacation rental property in Hawaii. During a guest stay, a fire breaks out, causing damage to the property. Which type of insurance coverage would typically respond to this scenario? A. Dwelling fire insurance policy. B. Homeowners insurance policy. C. Commercial property insurance policy. D. Umbrella insurance policy. Answer: C. Commercial property insurance policy. In Hawaii, a vacation rental property is typically insured under a commercial property insurance policy. This coverage is designed to protect commercial properties used for business purposes, including vacation rentals, against various perils such as fire, theft, and vandalism. Optional dwelling fire insurance policy covers specific perils damaging the dwelling itself, not liability or business use. Option B, homeowners insurance policy, typically excludes coverage for properties used for business purposes. Option D, umbrella insurance policy, provides additional liability coverage beyond primary policies. Question 27. Which statement regarding the claims handling process in Hawaii is correct? A. Claims must be settled within 30 days of filing. B. Insurers are not required to investigate claims. C. Insured parties can negotiate claims settlements directly with insurers. D. Insurers must provide a written explanation for claim denials. Answer: D. Insurers must provide a written explanation for claim denials. In Hawaii, insurers are required to provide a written explanation for claim denials detailing the reasons for the decision and any applicable policy provisions or legal grounds. This requirement ensures transparency and allows insured parties to understand why their claims were denied. Options A, B, and C are incorrect as they do not accurately reflect the claims handling requirements in Hawaii. Claim settlement timelines, investigation requirements, and negotiation processes are governed by state regulations to protect consumers' rights and ensure fair claims handling practices. Question 28. Which of the following is a key consideration for insurers when evaluating liability risks in Hawaii? A. Policyholder's credit score. B. Property's market value. C. Type of business operations. D. Insured's driving history. Answer: C. Type of business operations. In Hawaii, insurers assess liability risks based on the type of business operations conducted by the insured. Certain industries and business activities pose higher liability risks than others due to factors such as the nature of work, customer interactions, and potential for accidents or injuries. Options A, B, and D may be considered for other types of insurance, such as personal, auto, or property insurance, but are less relevant to evaluating liability risks in business operations. Question 29. Scenario: John Smith, a homeowner in Hawaii, experiences damage to his roof caused by a hailstorm. His insurance policy covers roof replacement based on the actual cash value (ACV) of the roof. Which statement regarding ACV is correct? A. ACV considers the replacement cost minus depreciation. B. ACV provides coverage for the full cost of replacement without depreciation. C. ACV is not applicable to roof replacement claims. D. ACV is determined based on the insured's credit score. Answer A. ACV considers the replacement cost minus depreciation. In Hawaii, actual cash value (ACV) is a method used to determine the amount of compensation for property damage, including roof replacement. ACV takes into account the replacement cost of the damaged property minus depreciation, reflecting the property's age and condition. Option B is incorrect as ACV includes depreciation. Option C is incorrect as ACV applies to property damage claims, including roof replacements. Option D is incorrect as ACV calculation does not involve the insured's credit score. Question 30. Which of the following is a responsibility of insurance producers in Hawaii? A. Setting insurance policy premiums. B. Investigating insurance claims. C. Advising clients on coverage options. D. Adjudicating insurance disputes. Answer: C. Advising clients on coverage options. In Hawaii, insurance producers, including agents and brokers, are responsible for advising clients on insurance coverage options based on their needs and circumstances. This includes explaining policy terms, coverage limits, and available endorsements to help clients make informed decisions. Setting insurance policy premiums is determined by insurers based on underwriting criteria. Investigating insurance claims, B, and adjudicating disputes, D, are handled by claims adjusters and regulatory bodies, respectively, rather than insurance producers. Question 31. Which of the following factors is typically considered by insurers when assessing property insurance premiums in Hawaii? A. Insured's annual income. B. Property's age. C. Proximity to police stations. D. Local property tax rates. Answer: B. Property's age. In Hawaii, insurers consider various factors when assessing property insurance premiums, including the age of the insured property. Older properties may be perceived as having a higher risk of maintenance issues or structural vulnerabilities affecting premium calculations. Options A, C, and D may influence other types of insurance premiums or property-related decisions, but are less directly relevant to determining property insurance premiums based on state-specific considerations. Question 32. Scenario: Emily owns a small retail business in Hawaii. During a busy shopping day, a customer slips and falls inside the store, sustaining injuries. Which type of insurance coverage would typically respond to this situation? A. Business interruption insurance. B. Workers' compensation insurance. C. Commercial general liability insurance. D. Property damage insurance. Answer: C. Commercial general liability insurance. In Hawaii, commercial general liability insurance covers businesses like Emma's retail store against claims of bodily injury or property damage caused to third parties, such as customers. This coverage extends to incidents like slips and falls occurring on the business premises, protecting the insured from legal liabilities and potential financial losses. Opshawa's business interruption insurance covers income loss due to temporary business closures. Option B, workers' compensation insurance, covers employee injuries. Option D, property damage insurance, covers physical damage to the insured property. Question 33. Which statement regarding the valuation of insured property in Hawaii is correct? A. Market value is typically used for determining property insurance premiums. B. Replacement cost considers the property's current market value. C. Actual cash value includes depreciation of the insured property. D. Valuation methods vary based on the insured's credit score. Answer: C. Actual cash value includes depreciation of the insured property. In Hawaii, actual cash value (ACV) is a valuation method used in property insurance to determine the compensation for damaged or lost property. ACV considers the replacement cost of the property minus depreciation, reflecting the property's age, condition, and wear over time. Option A is incorrect, as property insurance premiums are typically based on other factors like risk assessment and coverage limits. Option B is incorrect, as replacement cost is based on the cost to replace the property with new items of similar kind and quality, not its current market value. Option D is incorrect, as valuation methods in property insurance are based on property characteristics and risks, not the insured's credit score. Question 34. Which of the following is typically covered under Hawaii homeowners insurance policies personal liability coverage? A. Damage caused by earthquakes. B. Medical expenses for guests injured on the insured property. C. Flood damage to the insured property. D. Stolen personal belongings. Answer: B. Medical expenses for guests injured on the insured property. In Hawaii, homeowners insurance policies typically include personal liability coverage, which covers medical expenses for guests injured on the insured property and legal expenses if the homeowner is sued for accidental injuries or damages. Option A is incorrect, as earthquake damage typically requires separate coverage. Option C is incorrect, as flood damage is excluded from standard homeowners policies and requires separate flood insurance. Option D is incorrect, as stolen personal belongings are covered under personal property coverage, not personal liability coverage. Question 35. Scenario: Tom Wilson operates a small construction company in Hawaii. One of his employees accidentally damages a client's property while working on a project. Which type of insurance coverage would typically respond to this situation? A. Business owner's policy BOP. B. Errors and omissions EO insurance. C. Commercial auto insurance. D. Surety bond. Answer A. Business Owner's Policy BOP. In Hawaii, a business owner's policy BOP combines property insurance and liability insurance into one package, providing coverage for property damage caused by employees and liability protection against third-party claims such as damage to clients' property. Option B. Errors and omissions insurance covers professional negligence or errors in service delivery. Option C. Commercial auto insurance covers vehicles used for business purposes. Option D. Surety bond guarantees performance or completion of a contract, not property damage liability. Question 36. Which of the following is a primary purpose of Hawaii's insurance regulatory framework? A. Setting insurance policy rates. B. Ensuring fair claims handling practices. C. Adjudicating insurance disputes. D. Providing financial assistance to insurers. Answer B. Ensuring fair claims handling practices. In Hawaii, the insurance regulatory framework aims to protect consumers and maintain market stability by ensuring insurers adhere to fair claims handling practices. This includes timely claims processing, accurate claim assessments, and fair resolutions based on policy terms and state regulations. Obstacle setting insurance policy rates is typically determined by insurers based on risk assessment and market conditions. Option C. Adjudicating insurance disputes may involve regulatory bodies or legal proceedings. Option D. Providing financial assistance to insurers may occur in specific circumstances but is not the primary purpose of insurance regulation. Question 37. Which of the following is a key consideration for insurers when underwriting commercial property insurance in Hawaii? A. Insured's credit score. B. Location's proximity to emergency services. C. Property owner's annual income. D. Property's historical significance. Answer B. Location's proximity to emergency services. In Hawaii, insurers consider the location's proximity to emergency services, such as fire departments and hospitals, when underwriting commercial property insurance. Access to prompt emergency response can mitigate potential property damage and loss, influencing insurance premiums. Options A, C, and D may impact other aspects of insurance underwriting or property-related decisions but are less directly relevant to evaluating commercial property insurance risks based on state-specific considerations. Question 38. Scenario. Maria Garcia, a resident of Hawaii, has a personal umbrella insurance policy. She accidentally causes damage to her neighbor's fence while trimming trees on her property. Which type of coverage would respond to this situation? A. Personal liability coverage under homeowners insurance. B. Property damage coverage under auto insurance. C. Comprehensive personal liability coverage under umbrella insurance. D. Excess liability coverage under renters insurance. Answer C. Comprehensive personal liability coverage under umbrella insurance. In Hawaii, a personal umbrella insurance policy provides additional liability coverage beyond the limits of homeowners or auto insurance policies. Its coverage extends to incidents such as property damage caused by the insured's negligence, like Maria damaging her neighbor's fence while performing property maintenance activities. Optional personal liability coverage under homeowners insurance may cover similar incidents but within the primary policy's limits. Options B. Auto insurance and D. Renters insurance are typically limited to specific types of property or liability coverage, not comprehensive umbrella coverage. Question 39. Which of the following statements regarding the duties of insurance producers in Hawaii is correct? A. They are responsible for determining insurance policy rates. B. They must disclose their personal financial interests in insurance transactions. C. They are exempt from continuing education requirements. D. They can modify insurance policies without the insured's consent. Answer B. They must disclose their personal financial interests in insurance transactions. In Hawaii, insurance producers are required to disclose any personal financial interests they have in insurance transactions to clients. This ensures transparency and helps clients make informed decisions about purchasing insurance products. Option is incorrect, as insurance producers do not determine policy rates. This is typically set by insurers based on underwriting criteria. Option C is incorrect, as insurance producers must meet continuing education requirements to maintain their licenses. Option D is incorrect, as insurance policies can only be modified with the insured's consent and according to policy terms. Question 40. Which of the following is typically covered under Hawaii commercial property insurance policies business income coverage. A. Loss of inventory due to theft. B. Employee salaries and wages during a temporary shutdown. C. Property damage caused by earthquakes. D. Personal liability claims against the business owner. Answer: B. Employee salaries and wages during a temporary shutdown. In Hawaii, business income coverage under a commercial property insurance policy typically covers the loss of income and necessary expenses incurred by a business due to a covered peril, such as a fire or natural disaster, that temporarily shuts down operations. Optional loss of inventory due to theft may be covered under separate property coverage. Option C. Property damage caused by earthquakes requires separate earthquake insurance coverage. Option D. Personal liability claims against the business owner is covered under general liability insurance, not business income coverage. Question 41. Scenario: Sarah Jackson, a homeowner in Hawaii, experiences damage to her roof due to a hurricane. Her insurance policy covers roof replacement based on replacement cost value, RCV. Which statement regarding RCV is correct? A. RCV considers the property's market value at the time of the loss. B. RCV provides coverage for the cost to replace damaged property with new materials of similar kind and quality. C. RCV includes depreciation of the damaged property. D. RCV is determined based on the insured's credit score. Answer: B. RCV provides coverage for the cost to replace damaged property with new materials of similar kind and quality. In Hawaii, replacement cost value (RCV) is a method used to determine the amount of compensation for property damage under insurance policies. RCV covers the cost to replace damaged property with new materials or items of similar kind and quality, without deducting for depreciation. Option A is incorrect as RCV is not based on market value. Option C is incorrect as RCV excludes depreciation. Option D is incorrect as RCV calculation is based on property characteristics and replacement costs, not the insured's credit score. Question 42. Which of the following is a responsibility of insurance regulators in Hawaii? A. Setting insurance policy premiums. B. Approving insurance company mergers. C. Negotiating insurance claims settlements. D. Marketing insurance products directly to consumers. Answer: B. Approving insurance company mergers. In Hawaii, insurance regulators oversee the insurance industry to ensure compliance with state laws and protect consumer interests. This includes approving mergers and acquisitions involving insurance companies to assess their potential impact on market competition and consumer protection. Option A is incorrect as insurance policy premiums are determined by insurers based on underwriting criteria. Option C is incorrect as claims settlements are negotiated between insurers and policyholders or their representatives. Option D is incorrect as marketing insurance products directly to consumers is typically done by insurance agents and companies, not regulators. Question 43. Which of the following factors is considered when insurers determine premiums for Hawaii auto insurance policies? A. Insured's annual income. B. Vehicle's make and model. C. Proximity to schools. D. Credit score of the insured. Answer: B. Vehicles make and model. In Hawaii, insurers consider various factors when determining auto insurance premiums, including the make and model of the insured vehicle. Factors such as the vehicle's age, safety features, repair costs, and likelihood of theft or damage influence premium calculations. Options A, C, and D may impact other aspects of insurance or financial decisions but are less directly relevant to setting auto insurance premiums based on state-specific considerations. Question 44. Scenario: Mark Davis operates a landscaping business in Hawaii. One of his employees accidentally damages a client's underground irrigation system while working on a project. Which type of insurance coverage would typically respond to this situation? A. Commercial property insurance. B. Errors and omissions (EO) insurance. C. Business auto insurance. D. Commercial general liability insurance. Answer: D. Commercial general liability insurance. In Hawaii, commercial general liability insurance typically covers third-party bodily injury and property damage claims arising from business operations, including accidental damage caused by employees. This coverage protects businesses like Mark's landscaping company from legal liabilities and financial losses associated with such incidents. Option's commercial property insurance covers property damage to the insured business property. Option B, errors and omissions insurance, covers professional negligence or errors in service delivery. Option C, business auto insurance, covers vehicles used for business purposes. Question 45. Which statement regarding insurance producer licensing in Hawaii is correct? A. Licensing is voluntary for insurance agents. B. Licensing requirements are uniform across all U.S. states. C. Licensing must be renewed every 2 years. D. Licensing is regulated by individual insurance companies. Answer. C. Licensing must be renewed every 2 years. In Hawaii, insurance producer licensing is mandatory for individuals who sell insurance products or advise clients on insurance matters. Licensing ensures that producers meet state-specific qualifications, including passing exams and completing continuing education requirements every 2 years to stay updated with industry changes and regulations. Option A is incorrect as licensing is mandatory, not voluntary. Option B is incorrect as licensing requirements vary by state. Option D is incorrect as licensing is regulated by the state's insurance division, not individual insurance companies. Question 46. Which of the following is typically covered under Hawaii's commercial umbrella insurance policy? A. Property damage caused by natural disasters. B. Legal defense costs in liability lawsuits. C. Lost income due to business interruption. D. Employee health insurance benefits. Answer. B. Legal defense costs in liability lawsuits. In Hawaii, a commercial umbrella insurance policy provides additional liability coverage beyond the limits of primary insurance policies, such as general liability or commercial auto insurance. This coverage includes legal defense costs in liability lawsuits, which can be substantial expenses for businesses facing litigation. Option C was a property damage caused by natural disasters. C. Business interruption. And D. Employee health insurance benefits are typically covered under other specific insurance policies rather than commercial umbrella insurance. Question 47. Scenario. Amanda Roberts, a homeowner in Hawaii, installs solar panels on her property to reduce energy costs. A severe storm damages the solar panels, requiring replacement. Which type of insurance coverage would typically respond to this situation? A. Dwelling fire insurance policy. B. Personal property insurance coverage. C. Flood insurance policy. D. Additional structures insurance. Answer. B. Personal property insurance coverage. In Hawaii, personal property insurance coverage typically extends to items like solar panels installed on the insured property, covering damage or loss due to covered perils such as storms. This coverage compensates the homeowner for the cost to repair or replace damaged solar panels. Option A. Dwelling fire insurance policy covers specific perils damaging the main dwelling structure. Option C. Flood insurance policy covers flood-related damages. Option D. Additional structures insurance covers separate structures on the property, not personal property items. Question 48. Which statement regarding Hawaii's workers' compensation insurance is correct? A. Employers are not required to provide workers' compensation coverage. B. Workers' compensation benefits vary based on employee tenure. C. Workers' compensation covers injuries regardless of fault. D. Workers' compensation premiums are set by individual employers. Answer. C. Workers' compensation covers injuries regardless of fault. In Hawaii, workers' compensation insurance provides benefits to employees who suffer work-related injuries or illnesses, regardless of fault. This no-fault system ensures that employees receive medical care and wage replacement benefits without needing to prove employer negligence. Option A is incorrect as most employers in Hawaii are required to provide workers' compensation coverage. Option B is incorrect as benefits are typically based on the severity of the injury, not employee tenure. Option D is incorrect as workers' compensation premiums are determined based on industry classification and payroll, not set by individual employers. Question 49. Which of the following is typically covered under Hawaii's homeowners insurance personal liability coverage? A. Damage caused by earthquakes. B. Medical expenses for guests injured on the insured property. C. Loss of jewelry due to theft. D. Business property stored at home. Answer. B. Medical expenses for guests injured on the insured property. In Hawaii, homeowners insurance personal liability coverage typically includes medical expenses for guests injured on the insured property and legal expenses if the homeowner is sued for accidental injuries or damages. Option A is incorrect as earthquake damage typically requires separate coverage. Option C is incorrect as coverage for specific items like jewelry may be limited and require additional endorsements. Option D is incorrect as business property stored at home may require separate business insurance coverage. Question 50. Scenario. Jake Mitchell, a commercial property owner in Hawaii, leases office space to multiple tenants. A fire breaks out due to an electrical fault causing damage to the building. Which type of insurance coverage would typically respond to this situation? A. Tenant's commercial property insurance. B. Landlord's building property insurance. C. Business interruption insurance. D. Commercial general liability insurance. Answer. B. Landlord's building property insurance. In Hawaii, a landlord's building property insurance typically covers damages to the building structure caused by covered perils like fire. This coverage protects the property owner from financial losses associated with repairing or rebuilding the damaged building. Optional tenant's commercial property insurance covers the tenant's business property inside the leased space. Option C, business interruption insurance, covers income loss due to temporary business closures. Option D, commercial general liability insurance, covers liability claims against the property owner, not property damage. Question 51. Which of the following statements regarding insurance policy endorsements in Hawaii is correct? A. Endorsements modify policy limits and coverage terms. B. Endorsements are optional and do not require insurer approval. C. Endorsements are automatically included in all insurance policies. D. Endorsements can only be requested by insurance agents. Answer A. Endorsements modify policy limits and coverage terms. In Hawaii, insurance policy endorsements are amendments or additions that modify the terms, conditions, or coverage limits of an insurance policy to better fit the insured's needs. These endorsements require insurer approval and may involve adjusting premiums based on the changes made. Option B is incorrect as endorsements typically require insurer approval. Option C is incorrect as endorsements are specific to individual policyholders and their coverage needs. Option D is incorrect as endorsements can be requested by policyholders or their authorized representatives, not just insurance agents. Question 52. Which of the following is typically covered under Hawaii's commercial auto insurance policies? Comprehensive coverage. A. Medical expenses for passengers injured in an accident. B. Damage to the insured vehicle caused by a collision with another vehicle. C. Theft of the insured vehicle. D. Legal defense costs in liability lawsuits. Answer. C. Theft of the insured vehicle. In Hawaii, commercial auto insurance comprehensive coverage typically covers damage to the insured vehicle caused by perils other than collision, such as theft, vandalism, fire, or natural disasters. Optional medical expenses for passengers may be covered under liability or medical payments coverage. Option B, collision coverage, specifically covers damage due to collisions with other vehicles. Option D, legal defense costs, is typically covered under liability coverage. Question 53. Scenario. Lisa Thompson operates a daycare center in Hawaii. One of the children accidentally trips over a toy and breaks a bone. The child's parents file a lawsuit against Lisa for negligence. Which type of insurance coverage would typically respond to this situation? A. Business interruption insurance. B. Professional liability insurance. C. Cyber liability insurance. D. Employment practices liability insurance. Answer. B. Professional liability insurance. In Hawaii, professional liability insurance, also known as errors and omissions insurance, typically covers claims of negligence or errors in professional services provided by businesses like daycare centers. This coverage would respond to lawsuits alleging negligence resulting in bodily injury to a child under Lisa's care. Optional business interruption insurance covers income loss due to temporary business closures. Option C, cyber liability insurance, covers data breaches and related liabilities. Option D, employment practices liability insurance, covers claims related to employment issues, not negligence, and professional services. Question 54. Which statement regarding Hawaii's regulation of insurance rates is correct? A. Insurance companies can set rates independently without regulatory oversight. B. Insurance rates must be approved by the Hawaii Insurance Commissioner. C. Rate filings are optional for insurers operating in Hawaii. D. Rate setting is determined solely by consumer demand. Answer: B. Insurance rates must be approved by the Hawaii Insurance Commissioner. In Hawaii, insurance rates must be filed with and approved by the Hawaii Insurance Commissioner before they can be used. This regulatory oversight ensures that insurance rates are fair, reasonable, and comply with state laws protecting consumers from excessive premiums. Option A is incorrect, as insurance rates require regulatory approval. Option C is incorrect, as rate filings are mandatory for insurers operating in Hawaii. Option D is incorrect, as insurance rates are primarily based on risk assessment and regulatory guidelines rather than consumer demand alone. Question 55. Which of the following is typically covered under Hawaii's Commercial General Liability (CGL) insurance policy? A. Damage to the insured's own property. B. Employee injuries covered under workers' compensation. C. Legal defense costs in a liability lawsuit. D. Business income loss due to temporary closure. Answer: C. Legal defense costs in a liability lawsuit. In Hawaii, commercial general liability (CGL) insurance typically covers legal defense costs and damages associated with third-party claims of bodily injury, property damage, or personal injury arising from business operations. Option A is incorrect, as damage to the insured's own property is typically covered under property insurance, not CGL. Option B is incorrect, as employee injuries are covered under workers' compensation insurance. Option D is incorrect, as business income loss due to temporary closure is covered under business interruption insurance. Question 56. Scenario: John Lee, a homeowner in Hawaii, experiences water damage to his home due to a burst pipe. His insurance policy covers repair costs based on actual cash value (ACV). Which statement regarding ACV is correct? A. ACV includes depreciation of the damaged property. B. ACV equals the current market value of the damaged property. C. ACV covers the cost to replace damaged property with new materials. D. ACV is determined based on the insured's credit history. Answer A. ACV includes depreciation of the damaged property. In Hawaii, actual cash value (ACV) is a valuation method used in property insurance claims which takes into account depreciation of the damaged property. ACV is calculated by subtracting depreciation from the replacement cost of the property, reflecting its age, wear and tear, and market value. Option B is incorrect, as ACV is not necessarily equal to current market value. Option C describes replacement cost value (ACV), not ACV. Option D is incorrect, as ACV calculation is based on property characteristics and condition, not the insured's credit history. Question 57. Which of the following is a requirement for insurance producers in Hawaii? A. Issuing insurance policies without client consent. B. Completing continuing education courses periodically. C. Charging clients a flat fee for insurance advice. D. Recommending insurance products without understanding client needs. Answer: B. Completing continuing education courses periodically. In Hawaii, insurance producers are required to complete continuing education courses periodically to maintain their licenses and stay updated with industry changes, laws, and regulations. This requirement ensures that producers have current knowledge to effectively serve clients and comply with professional standards. Option A is incorrect, as issuing insurance policies without client consent is unethical and illegal. Option C is incorrect, as fees charged by insurance producers must be disclosed and reasonable. Option D is incorrect, as ethical practices require insurance producers to assess client needs before recommending products. Question 58. Which of the following is typically covered under Hawaii's commercial property insurance policies? Boiler and machinery coverage. A. Loss of inventory due to theft. B. Damage to equipment from a power surge. C. Employee medical expenses for workplace injuries. D. Legal costs for lawsuits against the business owner. Answer: B. Damage to equipment from a power surge. In Hawaii, commercial property insurance policies with boiler and machinery coverage typically cover damage to equipment from accidents such as power surges, mechanical breakdowns, or explosions. Offshore's loss of inventory due to theft may be covered under separate property coverage. Option C. Employee medical expenses are covered under workers' compensation insurance. Option D. Legal costs are covered under general liability insurance, not boiler and machinery coverage. Question 59. Scenario: Emily White operates a small retail store in Hawaii. During a busy holiday season, a customer slipped on a wet floor and suffers a serious injury. The customer decides to file a lawsuit against Emily for negligence. Which type of insurance coverage would typically respond to this situation? A. Business income insurance. B. Commercial umbrella insurance. C. Workers' compensation insurance. D. General liability insurance. Answer: D. General liability insurance. In Hawaii, general liability insurance typically covers claims of bodily injury or property damage caused by business operations, such as slip and fall accidents in a retail store. This coverage includes legal defense costs and settlements or judgments against the business owner for negligence. Option was business income insurance, covers income loss due to business interruptions. Option B, commercial umbrella insurance, provides additional liability coverage beyond the limits of primary policies. Option C, workers' compensation insurance, covers employee injuries, not customer liability claims. Question 60. Which of the following is a key responsibility of the Hawaii Insurance Division? A. Setting insurance policy rates. B. Approving insurance company mergers. C. Selling insurance products directly to consumers. D. Negotiating insurance claims settlements. Answer: B. Approving insurance company mergers. In Hawaii, the Insurance Division oversees the insurance industry to protect consumers and ensure compliance with state laws. One of its key responsibilities is to approve or deny insurance company mergers and acquisitions to safeguard market competition and consumer interests. Option A is incorrect, as insurance policy rates are set by insurers based on regulatory guidelines. Option C is incorrect, as selling insurance products is typically done by licensed agents and companies, not regulatory bodies. Option D is incorrect, as claims settlements are negotiated between insurers and policyholders, not by regulatory agencies. Question 61. Which of the following is typically covered under Hawaii's commercial umbrella insurance policies excess liability coverage? A. Property damage caused by fire. B. Legal defense costs in liability lawsuits. C. Employee theft of company funds. D. Business interruption losses. Answer: B. Legal defense costs in liability lawsuits. In Hawaii, commercial umbrella insurance provides excess liability coverage beyond the limits of primary insurance policies, such as general liability or commercial auto insurance. This coverage includes legal defense costs and damages associated with liability claims that exceed the limits of primary coverage. Option as a property damage caused by fire is typically covered under property insurance policies. Option C, employee theft, may require separate crime insurance coverage. Option D, business interruption losses, are covered under business interruption insurance. Question 62. Scenario: David Harris, a homeowner in Hawaii, installs a swimming pool in his backyard. A guest at a party accidentally slips and falls into the pool, suffering injuries. Which type of insurance coverage would typically respond to this situation? A. Personal liability coverage under homeowners insurance. B. Medical payments coverage under homeowners insurance. C. Flood insurance coverage. D. Personal injury protection coverage. Answer A. Personal liability coverage under homeowners insurance. In Hawaii, personal liability coverage under homeowners insurance typically covers legal expenses, medical expenses, and damages if a guest is injured on the insured property due to the homeowner's negligence. This coverage would respond to incidents such as slip and fall accidents involving a swimming pool on the insured premises. Option B, medical payments coverage, provides no-fault coverage for medical expenses regardless of fault. Option C, flood insurance, covers flood-related damages. Option D, personal injury protection, is typically associated with auto insurance, not homeowners insurance. Question 63. Which statement regarding Hawaii's insurance producer licensing requirements is correct? A. Licensing is only required for insurance agents, not brokers. B. Licensing requirements are uniform across all U.S. states. C. Licensing must be renewed every 5 years. D. Licensing is overseen by individual insurance companies. Answer A. Licensing is only required for insurance agents, not brokers. In Hawaii, insurance producer licensing is required for individuals who sell insurance products or provide advice to clients on insurance matters. This includes both insurance agents and brokers, ensuring they meet state-specific qualifications and ethical standards. Option B is incorrect as licensing requirements vary by state. Option C is incorrect as licensing renewal periods typically range from 1 to 3 years, not 5 years. Option D is incorrect as licensing is regulated by the state's insurance division, not individual insurance companies. Question 64. Which of the following is typically covered under Hawaii's commercial crime insurance policy? A. Damage to company vehicles in accidents. B. Theft of company money by an employee. C. Legal defense costs in liability lawsuits. D. Business income lost due to fire. Answer: B. Theft of company money by an employee. In Hawaii, commercial crime insurance typically covers losses arising from crimes such as employee theft, burglary, forgery, and fraud. This coverage protects businesses from financial losses due to dishonest acts committed by employees or third parties. Optional damage to company vehicles is typically covered under commercial auto insurance. Option C, legal defense costs in liability lawsuits, is covered under general liability insurance. Option D, business income lost due to fire, is covered under property insurance, specifically business interruption coverage. Question 65. Scenario: Sarah Anderson, a renter in Hawaii, experiences a break-in at her apartment. The burglars steal valuable jewelry and electronics. Which type of insurance coverage would typically provide protection for Sarah's stolen belongings? A. Landlord's property insurance. B. Renter's insurance, personal property coverage. C. Condo association master policy. D. Homeowner's insurance, other structures coverage. T. Answer: B. Renter's insurance, personal property coverage. In Hawaii, renter's insurance personal property coverage typically protects tenants like Sarah against theft, damage, or loss of personal belongings due to covered perils such as burglary or vandalism. This coverage reimburses the insured for the actual cash value, ACV, or replacement cost of stolen items, depending on the policy terms. Optional landlord's property insurance covers the building structure, not tenant belongings. Option C, condo association master policy, covers common areas and building structures in condominiums. Option D, homeowners insurance, other structures coverage, covers separate structures on homeowner property. Question 66. Which of the following is a requirement for insurance adjusters operating in Hawaii? A. Issuing settlement checks directly to policyholders. B. Completing ethics training annually. C. Charging clients the percentage of the claim amount as fees. D. Negotiating settlements without policyholder consent. Answer: B. Completing ethics training annually. In Hawaii, insurance adjusters are required to adhere to ethical standards and complete continuing education courses, including ethics training, to maintain their licenses. This requirement ensures adjusters are knowledgeable about state laws, regulations, and consumer protection measures when handling insurance claims. Option is incorrect as settlement checks are typically issued to policyholders or lien holders, not directly by adjusters. Option C is incorrect as fee structures must be disclosed and reasonable. Option D is incorrect as settlements require agreement between adjusters and policyholders or their representatives. Question 67. Which of the following is typically covered under Hawaii's commercial inland marine insurance policy? A. Liability for injuries to third parties. B. Damage to mobile equipment during transportation. C. Loss of income due to business interruption. D. Employee health benefits coverage. Answer: B. Damage to mobile equipment during transportation. In Hawaii, commercial inland marine insurance typically covers movable property and goods in transit, including coverage for mobile equipment and machinery while being transported. This coverage protects businesses from financial losses due to damage or theft of items not typically covered under standard property insurance. Optional liability for injuries is covered under general liability insurance. Option C, business interruption, is covered under business interruption insurance. Option D, employee health benefits coverage, is typically covered under separate health insurance policies. Question 68. Scenario: Alex Brown, a contractor in Hawaii, accidentally damages a client's property while working on a renovation project. The client demands compensation for the damage. Which type of insurance coverage would typically respond to this situation? A. Business owner's policy BOP. B. Commercial auto insurance. C. Contractor's professional liability insurance. D. Workers' compensation insurance. Answer: C. Contractors' professional liability insurance. In Hawaii, contractors' professional liability insurance, also known as errors and omissions insurance, typically covers claims of negligence or errors in professional services provided by contractors, including property damage to clients' premises. This coverage protects contractors like Alex from financial liabilities arising from accidental damage or mistakes during construction projects. Option's business owner's policy typically combines property and liability coverage for small businesses. Option B, commercial auto insurance, covers vehicles used for business purposes. Option D, workers' compensation insurance, covers employee injuries. Question 69. Which statement regarding Hawaii's regulation of insurance advertising is correct? A. Insurers are not required to disclose policy exclusions in advertisements. B. Advertising must be approved by the Hawaii Department of Commerce and Consumer Affairs. C. Comparative advertising is prohibited in Hawaii. D. Advertising aimed at minors is exempt from regulation. Answer: B. Advertising must be approved by the Hawaii Department of Commerce and Consumer Affairs. In Hawaii, insurance advertising must comply with state regulations, including disclosure requirements and fair advertising practices. Advertising materials, including content, format, and disclosures, must be reviewed and approved by the Hawaii Department of Commerce and Consumer Affairs to ensure accuracy, transparency, and compliance with consumer protection laws. Option is incorrect, as policy exclusions must be disclosed in insurance advertising. Option C is incorrect, as comparative advertising is allowed with certain guidelines. Option D is incorrect, as advertising aimed at minors is subject to specific regulations to protect vulnerable consumers. Question 70. Which of the following is typically covered under Hawaii's commercial auto insurance policies collision coverage? A. Theft of the insured vehicle. B. Legal defense costs in a liability lawsuit. C. Damage to the insured vehicle from a collision with another vehicle. D. Medical expenses for passengers injured in an accident. Answer: C. Damage to the insured vehicle from a collision with another vehicle. In Hawaii, commercial auto insurance collision coverage typically covers damage to the insured vehicle caused by a collision with another vehicle or object, regardless of fault. This coverage helps businesses repair or replace their vehicles due to accidents involving collisions. Optional theft is typically covered under comprehensive coverage. Option B, legal defense costs, is covered under liability coverage. Option D, medical expenses for passengers may be covered under medical payments or personal injury protection (PIP) coverage. Question 71. Scenario: Maria Johnson, a homeowner in Hawaii, experiences a severe windstorm that damages her roof. She submits a claim to her insurance company, which determines the roof is beyond repair and needs replacement. Which valuation method would typically determine the amount Maria receives for the roof replacement? A. Actual cash value (ACV). B. Replacement cost value (RCV). C. Market value. D. Depreciated cost. Answer: B. Replacement cost value (RCV). In Hawaii, replacement cost value (RCV) is a valuation method used in property insurance claims to reimburse the insured for the cost of replacing damaged property with new materials of like kind and quality without deduction for depreciation. This method ensures the insured can restore the property to its pre-loss condition. Optional actual cash value deducts depreciation from the replacement cost. Option C, market value, reflects the price at which the property would sell in the market. Option D, depreciated cost, is not typically used to determine insurance payouts but factors in the age and condition of the property. Question 72. Which statement regarding Hawaii's regulation of insurance policy cancellations is correct? A. Insurers can cancel policies without providing notice to policyholders. B. Policyholders must be notified of cancellations and the reasons for cancellation. C. Cancellations can only occur at the insurer's discretion. D. Cancellation notices are not required for policies in effect for less than 1 year. Answer: B. Policyholders must be notified of cancellations and the reasons for cancellation. In Hawaii, insurance regulations require insurers to notify policyholders of policy cancellations and the reasons for cancellation, providing a specified notice period to allow policyholders time to find alternative coverage if necessary. This consumer protection measure ensures transparency and fairness in insurance transactions. Option is incorrect, as insurers must provide notice of cancellations. Option C is incorrect as policy cancellations must comply with state regulations. Option D is incorrect as cancellation notices are required regardless of the policy duration. Question 73. Which of the following is typically covered under Hawaii's commercial general liability (CGL) insurance policies products completed operations coverage? A. Medical expenses for injured employees. B. Damage to the insured's own property. C. Legal defense costs in liability lawsuits. D. Bodily injury caused by a product after it has been sold. Answer: D. Bodily injury caused by a product after it has been sold. In Hawaii, commercial general liability (CGL) insurance includes products completed operations coverage which protects businesses from liability claims arising from bodily injury or property damage caused by products sold or operations completed. This coverage extends to incidents occurring after the product has left the business's control. Optional medical expenses for injured employees is covered under workers' compensation insurance. Option B, damage to the insured's own property, is typically covered under property insurance. Option C, legal defense costs, is covered under general liability insurance but not specifically products completed operations coverage. Question 74. Scenario: Mark Davis operates a small landscaping business in Hawaii. One of his employees accidentally damages a client's underground utility line while digging. The client files a lawsuit against Mark for negligence. Which type of insurance coverage would typically respond to this situation? A. Professional liability insurance. B. Commercial auto insurance. C. Business owner's policy (BOP). D. Contractor's liability insurance. Answer: D. Contractor's liability insurance. In Hawaii, contractor's liability insurance typically covers claims of property damage or bodily injury caused by the contractor's operations, such as damage to underground utilities during landscaping work. This coverage protects contractors like Mark from financial liabilities arising from accidents or negligence during business operations. OPSI was a professional liability insurance, typically covers errors or omissions in professional services, not physical damage during operations. Option B, commercial auto insurance, covers vehicles used for business purposes. Option C, BOP, combines property and liability coverage for small businesses but may not cover specific contractor liabilities. Question 75. Which statement regarding Hawaii's regulation of insurance claims handling is correct? A. Insurers are not required to respond to claims within a specified time frame. B. Policyholders must be notified of claim denials, but not the reasons for denial. C. Insurers must provide policyholders with a written explanation of claim denials. D. Claims handling practices are exempt from regulatory oversight. Answer: C. Insurers must provide policyholders with a written explanation of claim denials. In Hawaii, insurance regulations mandate that insurers must provide policyholders with a written explanation of claim denials, including the reasons for denial and the policy provisions that apply. This transparency requirement ensures that policyholders understand the basis for claim decisions and can appeal if necessary. Option A is incorrect as insurers are generally required to respond to claims promptly. Option B is incorrect as policyholders must be informed of both claim denials and the reasons for denial. Option D is incorrect as claims handling practices are subject to regulatory oversight to protect consumer interests. Question 76. Which of the following is typically covered under Hawaii's commercial property insurance policies, ordinance, or law coverage? A. Loss of inventory due to theft. B. Damage to buildings caused by fire. C. Costs to upgrade a building to current building codes. D. Legal defense costs in liability lawsuits. Answer: C. Costs to upgrade a building to current building codes. In Hawaii, commercial property insurance policies with ordinance or law coverage typically cover the additional costs incurred to repair or rebuild a damaged building to comply with current building codes or ordinances. This coverage ensures that insured properties can be restored in compliance with updated safety and construction standards. Option's loss of inventory due to theft is typically covered under property insurance contents coverage. Option B, damage to buildings caused by fire, is covered under property insurance. Option D, legal defense costs, are covered under general liability insurance, not ordinance or law coverage. Question 77. Scenario: Sarah Lee, a homeowner in Hawaii, experiences a severe storm that causes extensive damage to her roof and walls. She files a claim with her insurance company, which determines the total repair costs exceed the policy limits. Which insurance coverage could Sarah use to cover the excess repair costs? A. Excess liability insurance. B. Additional living expenses coverage. C. Umbrella insurance policy. D. Personal property insurance. Answer: C. Umbrella insurance policy. In Hawaii, an umbrella insurance policy provides additional liability coverage beyond the limits of primary insurance policies, such as homeowners insurance. If Sarah's homeowners insurance policy limits are insufficient to cover all repair costs, our umbrella policy could potentially cover the excess expenses, subject to the umbrella policy's terms and conditions. Option Q is excess liability insurance, typically supplements primary liability coverage, not property damage coverage. Option B, additional living expenses coverage, reimburses living expenses during home repairs. Option D, personal property insurance, covers belongings, not excess repair costs. Question 78. Which statement regarding Hawaii's regulation of insurance producer conduct is correct? A. Insurance producers are prohibited from recommending policies to clients. B. Insurance producers must disclose their commission rates to clients. C. Insurance producers can accept gifts from insurance companies without disclosure. D. Insurance producers are exempt from continuing education requirements. Answer: B. Insurance producers must disclose their commission rates to clients. In Hawaii, insurance producers are required to disclose their commission rates and any potential conflicts of interest to clients when recommending insurance products or services. This transparency helps consumers make informed decisions about their insurance coverage options. Option A is incorrect, as insurance producers are expected to recommend suitable policies based on client needs. Option C is incorrect, as accepting gifts may create conflicts of interest and must be disclosed. Option D is incorrect, as insurance producers must complete continuing education to maintain their licenses and stay updated with industry changes. Question 79. Which of the following is typically covered under Hawaii's commercial umbrella insurance policy's excess liability coverage? A. Property damage caused by fire. B. Legal defense costs in liability lawsuits. C. Employee theft of company funds. D. Business interruption losses. Answer: B. Legal defense costs in liability lawsuits. In Hawaii, commercial umbrella insurance provides excess liability coverage beyond the limits of primary insurance policies, such as general liability or commercial auto insurance. This coverage includes legal defense costs and damages associated with liability claims that exceed the limits of primary coverage. Option was a property damage caused by fire is typically covered under property insurance policies. Option C, employee theft, may require separate crime insurance coverage. Option D, business interruption losses are covered under business interruption insurance. Question 80. Scenario: Emily White, a small business owner in Hawaii, discovers that valuable equipment has been stolen from her office overnight. She files a claim with her insurance company, but is unsure whether theft is covered under her commercial property insurance policy. What information should Emily review to determine coverage? A. The insurance company's annual report. B. The policy declarations page and coverage form. C. The state insurance regulations. D. The insurance agent's business card. Answer: B. The policy declarations page and coverage form. In Hawaii, the policy declarations page and coverage form outline the specific details of coverage, including perils insured against, such as theft, policy limits, deductibles, and any exclusions. Emily should review these documents to understand whether theft is covered under her commercial property insurance policy and the extent of coverage provided. Opshiwa's insurance company's annual report provides financial information but not coverage details. Option C, state insurance regulations, outlines general guidelines but does not specify individual policy coverage. Option D, insurance agent's business card, is not relevant to determining insurance coverage. Question 81. Which of the following is a key responsibility of the Hawaii Insurance Division? A. Setting insurance policy rates. B. Approving insurance company mergers. C. Selling insurance products directly to consumers. D. Negotiating insurance claims settlements. Answer: B. Approving insurance company mergers. In Hawaii, the Insurance Division oversees the insurance industry to protect consumers and ensure compliance with state laws. One of its key responsibilities is to approve or deny insurance company mergers and acquisitions to safeguard market competition and consumer interests. Option A is incorrect, as insurance policy rates are set by insurers based on regulatory guidelines. Option C is incorrect, as selling insurance products is typically done by licensed agents and companies, not regulatory bodies. Option D is incorrect, as claims settlements are negotiated between insurers and policyholders, not by regulatory agencies. Question 82. Which of the following is typically covered under Hawaii's commercial crime insurance policy? A. Damage to company vehicles in accidents. B. Theft of company money by an employee. C. Legal defense costs in liability lawsuits. D. Business income lost due to fire. Answer: B. Theft of company money by an employee. In Hawaii, commercial crime insurance typically covers losses arising from crimes such as employee theft, burglary, forgery, and fraud. This coverage protects businesses from financial losses due to dishonest acts committed by employees or third parties. Option was damage to company vehicles is typically covered under commercial auto insurance. Option C, legal defense costs in liability lawsuits, is covered under general liability insurance. Option D, business income loss due to fire, is covered under business interruption insurance. Question 83. Scenario: David Harris, a homeowner in Hawaii, installs a swimming pool in his backyard. A guest at a party accidentally slips and falls into the pool, suffering injuries. Which type of insurance coverage would typically respond to this situation? A. Personal liability coverage under homeowners insurance. B. Medical payments coverage under homeowners insurance. C. Flood insurance coverage. D. Personal injury protection coverage. Answer A. Personal liability coverage under homeowners insurance. In Hawaii, personal liability coverage under homeowners insurance typically covers legal expenses, medical expenses, and damages if a guest is injured on the insured property due to the homeowner's negligence. This coverage would respond to incidents such as slip and fall accidents involving a swimming pool on the insured premises. Option B, medical payments coverage, provides no fault coverage for medical expenses regardless of fault. Option C, flood insurance, covers flood-related damages. Option D, personal injury protection, is typically associated with auto insurance, not homeowners insurance. Question 84. Which statement regarding Hawaii's insurance producer licensing requirements is correct? A. Licensing is only required for insurance agents, not brokers. B. Licensing requirements are uniform across all U.S. states. C. Licensing must be renewed every 5 years. D. Licensing is overseen by individual insurance companies. Answer A. Licensing is only required for insurance agents, not brokers. In Hawaii, insurance producer licensing is required for individuals who sell insurance products or provide advice to clients on insurance matters. This includes both insurance agents and brokers, ensuring they meet state-specific qualifications and ethical standards. Option B is incorrect, as licensing requirements vary by state. Option C is incorrect, as licensing renewal periods typically range from 1 to 3 years, not 5 years. Option D is incorrect, as licensing is regulated by the state's insurance division, not individual insurance companies. Question 85. Which of the following is typically covered under Hawaii's commercial general liability (CGL) insurance policies? Advertising injury coverage. A. Damage to company vehicles in accidents. B. Legal defense costs in liability lawsuits. C. Copyright infringement in advertising materials. D. Employee injuries on the job site. Answer: C. Copyright infringement in advertising materials. In Hawaii, commercial general liability (CGL) insurance includes advertising injury coverage, which protects businesses from claims of copyright infringement, defamation, or other offenses related to advertising activities. This coverage extends to legal defense costs and damages associated with advertising injuries. Option where damage to company vehicles is typically covered under commercial auto insurance. Option B, legal defense costs, is covered under general liability insurance but not specifically advertising injury coverage. Option D, employee injuries, are covered under workers' compensation insurance. Question 86. Scenario: Jessica Taylor, a renter in Hawaii, accidentally causes a kitchen fire that damages the apartment complex. The landlord files a lawsuit against Jessica for property damage. Which type of insurance coverage would typically respond to this situation? A. Landlord's property insurance. B. Renters insurance liability coverage. C. Condo association master policy. D. Umbrella insurance policy. Answer: B. Renters insurance liability coverage. In Hawaii, renters insurance liability coverage typically protects tenants like Jessica from legal expenses and damages if they accidentally cause property damage or bodily injury to others. This coverage would respond to lawsuits filed by the landlord for damage caused by Jessica's negligence. Optional landlord's property insurance covers the building structure, not tenant liabilities. Option C. Condo association master policy covers common areas and building structures in condominiums. Option D. Umbrella insurance policy provides additional liability coverage beyond primary policies. Question 87. Which statement regarding Hawaii's regulation of insurance premiums is correct? A. Insurers can increase premiums without notifying policyholders. B. Premium rates are set by individual insurance agents. C. Premium rates must be filed and approved by the insurance commissioner. D. Premium rates are determined solely by insurance brokers. Answer: C. Premium rates must be filed and approved by the insurance commissioner. In Hawaii, insurance regulations require insurers to file their premium rates with the insurance commissioner and obtain approval before implementing changes. This regulatory oversight ensures that premium rates are fair, reasonable, and comply with state laws protecting consumers from arbitrary rate increases. Option A is incorrect, as insurers must notify policyholders of premium changes. Option B and D are incorrect, as premium rates are set by insurers based on filed rates and regulatory guidelines, not individual agents or brokers. Question 88. Which of the following is typically covered under Hawaii's commercial property insurance policies? Business income coverage. A. Employee theft of company funds. B. Legal defense costs in liability lawsuits. C. Loss of income due to a covered peril. D. Damage to company vehicles in accidents. Answer: C. Loss of income due to a covered peril. In Hawaii, commercial property insurance includes business income coverage, which reimburses businesses for lost income and operating expenses if they are unable to operate due to a covered loss, such as fire or natural disaster. This coverage helps businesses recover financially during the restoration period. Option or employee theft may require separate crime insurance coverage. Option B, legal defense costs, is covered under general liability insurance. Option D, damage to company vehicles, is typically covered under commercial auto insurance. Question 89. Scenario: John Smith, a homeowner in Hawaii, suffers water damage due to a burst pipe in his basement. He files a claim with his insurance company but is dissatisfied with the settlement amount offered. What recourse does John have under Hawaii's insurance regulations? A. File an appeal with the insurance company's internal appeals board. B. File a complaint with the Hawaii Department of Commerce and Consumer Affairs. C. Request mediation through the insurance agent. D. Take legal action against the insurance company. Answer: B. File a complaint with the Hawaii Department of Commerce and Consumer Affairs. In Hawaii, if a homeowner like John Smith is dissatisfied with an insurance claim settlement, he can file a complaint with the Hawaii Department of Commerce and Consumer Affairs. The department oversees insurance practices in the state and can investigate complaints to ensure compliance with state laws and fair treatment of policyholders. Option A, internal appeals board, and option C, mediation through the insurance agent, may be internal processes but do not involve regulatory oversight. Option D, legal action, can be pursued after exhausting other options but is not the first recourse. Question 90. Which statement regarding Hawaii's regulation of insurance policy renewals is correct? A. Insurers can renew policies without providing notice to policyholders. B. Policyholders must be notified of non-renewals and the reasons for non-renewal. C. Policy renewals are automatic and do not require action from policyholders. D. Policyholders must renew policies annually regardless of the insurer's decision. Answer: B. Policyholders must be notified of non-renewals and the reasons for non-renewal. In Hawaii, insurers are required to notify policyholders of non-renewals and provide reasons for non-renewal in advance of the policy expiration date. This notification allows policyholders time to seek alternative coverage if necessary. Option A is incorrect, as insurers must provide notice of non-renewals. Option C is incorrect as policyholders often have to take action to renew policies. Option D is incorrect as policyholders are not required to renew policies if they are non-renewed by the insurer. Question 91. Which of the following is typically covered under Hawaii's commercial auto insurance policy's comprehensive coverage? A. Damage to the insured vehicle from a collision with another vehicle. B. Legal defense costs in liability lawsuits. C. Theft of the insured vehicle. D. Medical expenses for passengers injured in an accident. Answer: C. Theft of the insured vehicle. In Hawaii, commercial auto insurance comprehensive coverage typically covers theft of the insured vehicle, vandalism, fire, and other non-collision incidents that may damage or result in the loss of the vehicle. This coverage helps businesses recover from financial losses due to theft or damage not caused by a collision with another vehicle. Optional collision coverage covers damage from collisions. Option B, legal defense costs, is covered under general liability insurance. Option D, medical expenses may be covered under medical payments or personal injury protection (PIP) coverage. Question 92. Scenario: Michael Brown, a business owner in Hawaii, leases office space and installs custom-made furniture. A fire breaks out due to faulty wiring, destroying the furniture. Which insurance coverage would typically respond to this situation? A. Building property insurance. B. Business personal property insurance. C. Boiler and machinery insurance. D. Inland marine insurance. Answer: B. Business personal property insurance. In Hawaii, business personal property insurance typically covers movable property owned by a business, such as furniture, equipment, and inventory, against perils like fire, theft, vandalism, and certain types of water damage. This coverage would respond to the loss of custom-made furniture due to a fire in the leased office space. Optional building property insurance covers the building structure, not business personal property. Options C and D, boiler and machinery insurance, inland marine insurance, cover specific types of property and equipment not typically included in business personal property insurance. Question 93. Which statement regarding Hawaii's regulation of insurance advertising is correct? A. Insurers can advertise false information as long as it is not misleading. B. Advertisements must disclose all policy exclusions and limitations. C. Advertising rules do not apply to insurance agents and brokers. D. Insurance advertisements do not require approval from the insurance commissioner. Answer: B. Advertisements must disclose all policy exclusions and limitations. In Hawaii, insurance advertising regulations require insurers to disclose all material facts about insurance policies, including exclusions, limitations, and conditions that may affect coverage. This ensures that consumers have accurate information to make informed decisions about insurance products. Option A is incorrect, as advertising false information, even if not misleading, is prohibited. Option C is incorrect, as advertising rules apply to insurers, agents, and brokers. Option D is incorrect, as some insurance advertisements may require approval from the insurance commissioner to ensure compliance with state laws. Question 94. Which of the following is typically covered under Hawaii's commercial general liability (CGL) insurance policies, premises, and operations coverage? A. Damage to company vehicles in accidents. B. Legal defense costs in liability lawsuits. C. Bodily injury to third parties at the insured's premises. D. Theft of company funds by an employee. Answer: C. Bodily injury to third parties at the insured's premises. In Hawaii, commercial general liability (CGL) insurance includes premises and operations coverage, which protects businesses from liability claims for bodily injury or property damage occurring at the insured's premises or as a result of the insured's operations. This coverage typically includes legal defense costs and damages awarded in liability lawsuits. Option A, damage to company vehicles, is typically covered under commercial auto insurance. Option D, theft of company funds by an employee, may require separate crime insurance coverage. Question 95. Scenario: Linda Johnson, the homeowner in Hawaii, experiences severe damage to her roof due to a hailstorm. She files a claim with her insurance company, but the insurer denies the claim, citing insufficient evidence of hail damage. What should Linda do next under Hawaii's insurance regulations? A. File a complaint with the Better Business Bureau. B. Request an independent appraisal of the roof damage. C. Accept the claim denial without further action. D. Negotiate directly with the insurance adjuster. Answer: B. Request an independent appraisal of the roof damage. In Hawaii, if Linda Johnson disputes the insurance claim denial due to insufficient evidence of hail damage, she can request an independent appraisal of the roof damage. This process allows for a third-party assessment to verify the extent and cause of the damage, potentially overturning the claim denial if sufficient evidence of hail damage is found. Option equals Better Business Bureau complaint may be an option but does not directly address the claim dispute. Option C, accepting the denial, and Option D, direct negotiation, may be pursued but do not involve an independent assessment. Question 96. Which statement regarding Hawaii's regulation of insurance companies' solvency is correct? A. Insurance companies are not required to maintain financial reserves. B. The Hawaii Department of Commerce and Consumer Affairs oversees solvency regulations. C. Insurers must file quarterly financial statements with the State Insurance Commissioner. D. Solvency regulations do not apply to health insurance companies. Answer: C. Insurers must file quarterly financial statements with the State Insurance Commissioner. In Hawaii, insurance regulations require insurers to maintain solvency by filing quarterly financial statements with the State Insurance Commissioner. These statements disclose the insurer's financial condition, including assets, liabilities, and reserves, to ensure that the insurer can meet its obligations to policyholders. Option A is incorrect, as maintaining financial reserves is crucial for insurer solvency. Option B is incorrect, as the Department of Commerce and Consumer Affairs oversees insurance practices but not exclusively solvency regulations. Option D is incorrect, as solvency regulations apply to all types of insurance companies. Question 97. Which of the following is typically covered under Hawaii's commercial inland marine insurance policy? A. Damage to company vehicles in accidents. B. Theft of construction equipment at a job site. C. Legal defense costs in liability lawsuits. D. Business income loss due to fire. Answer: B. Theft of construction equipment at a job site. In Hawaii, commercial inland marine insurance typically covers movable property and specialized equipment that may be transported or used at various locations, including job sites. This coverage protects against risks such as theft, damage during transportation, and other specified perils. Offshore damage to company vehicles is typically covered under commercial auto insurance. Option C, legal defense costs, is covered under general liability insurance. Option D, business income loss due to fire, is covered under business interruption insurance. Question 98. Scenario: Mark Davis, a business owner in Hawaii, purchases a commercial property insurance policy for his warehouse. During a severe storm, strong winds cause a tree to fall on the warehouse roof, resulting in significant damage. Which coverage under his policy would apply to repair the roof? A. Building property insurance. B. Business personal property insurance. C. Ordinance or law coverage. D. Boiler and machinery insurance. Answer A. Building property insurance. In Hawaii, building property insurance under a commercial property insurance policy typically covers structural damage to the insured building, including roofs, caused by perils such as windstorms, hail, or falling objects like trees. This coverage would apply to repair the roof damaged by the fallen tree. Option B, business personal property insurance, covers movable property and contents inside the building. Option C, ordinance or law coverage, covers additional costs to comply with building codes. Option D, boiler and machinery insurance, covers specific equipment, not building structures. Question 99. Which statement regarding Hawaii's regulation of insurance agent conduct is correct? A. Insurance agents are allowed to misrepresent policy terms to clients. B. Agents must disclose conflicts of interest when recommending insurance products. C. Agents are exempt from obtaining a license to sell insurance products. D. Agent commission rates do not need to be disclosed to clients. Answer: B. Agents must disclose conflicts of interest when recommending insurance products. In Hawaii, insurance agents are required to disclose any conflicts of interest that could influence their recommendations when selling insurance products to clients. This transparency ensures that clients are aware of potential biases and can make informed decisions about their insurance coverage. Option is incorrect, as misrepresenting policy terms is prohibited. Option C is incorrect, as agents must obtain a license to sell insurance. Option D is incorrect, as agent commission rates must be disclosed under Hawaii's regulatory requirements. Question 100. Which of the following is typically covered under Hawaii's commercial umbrella insurance policy's excess liability coverage? A. Damage to company vehicles in accidents. B. Legal defense costs in liability lawsuits. C. Employee theft of company funds. D. Business interruption losses. Answer: B. Legal defense costs in liability lawsuits. In Hawaii, commercial umbrella insurance provides excess liability coverage beyond the limits of primary insurance policies, such as general liability or commercial auto insurance. This coverage includes legal defense costs and damages associated with liability claims that exceed the limits of primary coverage. Option damage to company vehicles is typically covered under commercial auto insurance. Option C, employee theft, may require separate crime insurance coverage. Option D, business interruption losses, are covered under business interruption insurance. Question 101. Scenario: Emily White, a small business owner in Hawaii, discovers that valuable equipment has been stolen from her office overnight. She files a claim with her insurance company, but is unsure whether theft is covered under her commercial property insurance policy. What information should Emily review to determine coverage? A. The insurance company's annual report. B. The policy declarations page and coverage form. C. The state insurance regulations. D. The insurance agent's business card. Answer: B. The policy declarations page and coverage form. In Hawaii, the policy declarations page and coverage form outline the specific details of coverage, including perils insured against, such as theft, policy limits, deductibles, and any exclusions. Emily should review these documents to understand whether theft is covered under her commercial property insurance policy and the extent of coverage provided. Opshiwa's insurance company's annual report provides financial information but not coverage details. Option C, state insurance regulations, outlines general guidelines but does not specify individual policy coverage. Option D, insurance agent's business card, is not relevant to determining insurance coverage. Question 102. Which of the following is a key responsibility of the Hawaii Insurance Division? A. Setting insurance policy rates. B. Approving insurance company mergers. C. Selling insurance products directly to consumers. D. Negotiating insurance claims settlements. Answer: B. Approving insurance company mergers. In Hawaii, the Insurance Division oversees the insurance industry to protect consumers and ensure compliance with state laws. One of its key responsibilities is to approve or deny insurance company mergers and acquisitions to safeguard market competition and consumer interests. Option A is incorrect, as insurance policy rates are set by insurers based on regulatory guidelines. Option C is incorrect, as selling insurance products is typically done by licensed agents and companies, not regulatory bodies. Option D is incorrect, as claims settlements are negotiated between insurers and policyholders, not by regulatory agencies. Question 103. Which of the following is typically covered under Hawaii's commercial crime insurance policy's employee theft coverage? A. Damage to company vehicles in accidents. B. Legal defense costs in liability lawsuits. C. Theft of money or property by an employee. D. Business income loss due to fire. Answer: C. Theft of money or property by an employee. In Hawaii, commercial crime insurance typically includes coverage for employee theft, which protects businesses from financial losses caused by dishonest acts such as theft of money, securities, or property committed by employees. This coverage helps businesses recover from losses due to employee theft, whether it occurs through embezzlement, forgery, or other fraudulent activities. Option or damage to company vehicles is typically covered under commercial auto insurance. Option B, legal defense costs, is covered under general liability insurance. Option D, business income loss, is covered under business interruption insurance. Question 104. Scenario: Sarah Lee, a homeowner in Hawaii, experiences a water leak in her basement that damages valuable artwork. She files a claim with her insurance company but is concerned about the appraisal of the artwork's value. What can Sarah do to ensure a fair appraisal under Hawaii's insurance regulations? A. Hire a local art appraiser recommended by the insurance company. B. Request an independent appraisal from a qualified appraiser. C. Accept the insurance company's appraisal without question. D. Negotiate directly with the insurance adjuster. Answer: B. Request an independent appraisal from a qualified appraiser. In Hawaii, if Sarah Lee is dissatisfied with the insurance company's appraisal of her artwork's value, she can request an independent appraisal from a qualified appraiser not affiliated with the insurance company. This ensures an impartial assessment and helps resolve disputes over the value of damaged or lost property covered under her homeowner's insurance policy. Optional as a local art appraiser recommended by the insurance company may have a conflict of interest. Option C, accepting the insurance company's appraisal may not be in Sarah's best interest without verification. Option D, negotiating with the adjuster may not resolve appraisal disputes effectively. Question 105. Which statement regarding Hawaii's regulation of insurance producer licensing is correct? A. Insurance producers are exempt from continuing education requirements. B. Licensing is mandatory only for insurance agents, not brokers. C. Insurance producers must renew their licenses every 5 years. D. Licensing requirements are uniform across all U.S. states. Answer: C. Insurance producers must renew their licenses every 5 years. In Hawaii, insurance producer licensing requirements include renewing licenses every 5 years to ensure that producers meet current standards and regulatory changes. This renewal process typically involves completing continuing education courses to stay updated on industry practices and state-specific regulations. Option A is incorrect, as continuing education is typically required for license renewal. Option B is incorrect, as both insurance agents and brokers are required to be licensed. Option D is incorrect, as licensing requirements vary by state and may include state-specific regulations. Question 106. Which of the following is typically covered under Hawaii's commercial general liability (CGL) insurance policies? Products completed operations coverage. A. Damage to company vehicles in accidents. B. Legal defense costs in liability lawsuits. C. Bodily injury or property damage caused by completed work. D. Theft of company funds by an employee. Answer: C. Bodily injury or property damage caused by completed work. In Hawaii, commercial general liability (CGL) insurance includes products completed operations coverage, which protects businesses from liability claims for bodily injury or property damage that occur after work has been completed or products have been distributed to customers. This coverage is crucial for businesses that provide services or manufacture products, ensuring they are protected against claims arising from completed operations. Optional damage to company vehicles is typically covered under commercial auto insurance. Option B, legal defense costs, is covered under general liability insurance. Option D, theft of company funds may require separate crime insurance coverage. Question 107. Scenario: James Johnson, a contractor in Hawaii, accidentally damages a client's property during a construction project. The client files a lawsuit against James for property damage. Which insurance coverage would typically respond to this situation? A. Commercial property insurance. B. Commercial auto insurance. C. Commercial general liability insurance. D. Professional liability insurance. Answer: C. Commercial general liability insurance. In Hawaii, commercial general liability (CGL) insurance typically covers third-party claims for bodily injury or property damage caused by the insured's business operations, including accidental damage during construction projects. This coverage includes legal defense costs and damages awarded in liability lawsuits, protecting contractors like James Johnson from financial losses due to lawsuits filed by clients. Options as commercial property insurance covers property owned by the insured, not liability for damage to third-party property. Option B, commercial auto insurance, covers vehicles used for business purposes. Option D, professional liability insurance, covers errors and omissions in professional services, not general liability. Question 108. Which statement regarding Hawaii's regulation of insurance policy cancellations is correct? A. Insurers can cancel policies at any time without cause or notice. B. Policyholders must be notified of cancellations and the reasons for cancellation. C. Policy cancellations require approval from the insurance commissioner. D. Policyholders cannot dispute policy cancellations once notified. Answer: B. Policyholders must be notified of cancellations and the reasons for cancellation. In Hawaii, insurers are required to notify policyholders of policy cancellations and provide reasons for cancellation in advance of the cancellation date. This notification period allows policyholders time to address any issues or find alternative coverage if necessary. Option A is incorrect, as insurers must have valid reasons and provide notice for cancellations. Option C is incorrect, as cancellations do not typically require approval from the insurance commissioner. Option D is incorrect, as policyholders have the right to dispute cancellations and seek resolution through the insurer or regulatory channels. Question 109. Which of the following is typically covered under Hawaii's commercial property insurance policies? Equipment breakdown coverage. A. Damage to company vehicles in accidents. B. Legal defense costs in liability lawsuits. C. Repair or replacement of malfunctioning equipment. D. Business income loss due to vandalism. Answer: C. Repair or replacement of malfunctioning equipment. In Hawaii, commercial property insurance often includes equipment breakdown coverage, which protects businesses from financial losses due to the sudden and accidental breakdown of equipment such as boilers, HVAC systems, or production machinery. This coverage typically includes the cost to repair or replace the malfunctioning equipment and may also cover business interruption losses resulting from equipment failure. Option A, damage to company vehicles, is typically covered under commercial auto insurance. Option B, legal defense costs, is covered under general liability insurance. Option D, business income loss due to vandalism, may be covered under vandalism or business interruption insurance. Question 110. Scenario: Lisa Brown, a homeowner in Hawaii, hosts a social gathering at her residence where a guest accidentally slips and falls, sustaining injuries. The guest files a lawsuit against Lisa for bodily injury. Which insurance coverage would typically respond to this situation? A. Personal auto insurance. B. Personal umbrella insurance. C. Homeowners liability insurance. D. Personal property insurance. Answer: C. Homeowners liability insurance. In Hawaii, homeowners liability insurance typically covers legal expenses, medical expenses, and damages if a guest is injured on the insured property and files a liability claim or lawsuit against the homeowner. This coverage protects homeowners like Lisa Brown from financial losses due to bodily injury or property damage claims arising from incidents on their property, including slip and fall accidents during social gatherings. Optional personal auto insurance covers accidents involving vehicles, not liability on the homeowner's property. Option B, personal umbrella insurance, provides additional liability coverage beyond primary policies. Option D, personal property insurance, covers belongings inside the home, not liability for injuries to third parties. Question 111. Which statement regarding Hawaii's regulation of insurance advertising is correct? A. Insurers are allowed to use misleading statements in advertisements. B. Advertisements must prominently feature testimonials from policyholders. C. Insurance advertisements must disclose all material terms and conditions. D. Advertising rules do not apply to online advertisements. Answer: C. Insurance advertisements must disclose all material terms and conditions. In Hawaii, insurance advertising regulations require insurers to disclose all material terms and conditions of insurance policies in advertisements to ensure transparency and prevent misleading consumers. This includes disclosing exclusions, limitations, and other important details that may impact coverage. Option A is incorrect, as using misleading statements in advertisements is prohibited. Option B is incorrect, as testimonials must comply with specific guidelines but are not mandatory in all advertisements. Option D is incorrect, as advertising rules apply to all forms of advertisements, including online platforms. Question 112. Which of the following is typically covered under Hawaii's commercial auto insurance policies? Uninsured motorist coverage. A. Damage to the insured vehicle in a collision. B. Legal defense costs in liability lawsuits. C. Medical expenses for passengers injured in an accident. D. Theft of the insured vehicle. Answer: C. Medical expenses for passengers injured in an accident. In Hawaii, commercial auto insurance uninsured motorist coverage typically covers medical expenses for passengers injured in an accident caused by an uninsured or underinsured motorist. This coverage is designed to protect occupants of the insured vehicle when the at-fault party does not have adequate insurance coverage to pay for their injuries. Optional damage to the insured vehicle is covered under collision or comprehensive coverage. Option B, legal defense costs, is covered under general liability insurance. Option D, theft of the insured vehicle is covered under comprehensive coverage. Question 113 scenario. John Smith, a business owner in Hawaii, discovers water damage to his office due to a burst pipe. He files a claim with his insurance company but is concerned about the coverage for water damage under his commercial property insurance policy. What should John review to determine coverage? A. The insurance company's customer service policy. B. The policy exclusions and limitations section. C. Consumer complaints filed against the insurance company. D. The insurance agent's professional credentials. Answer: B. The policy exclusions and limitations section. In Hawaii, John Smith should review the policy exclusions and limitations section of his commercial property insurance policy to determine whether water damage from a burst pipe is covered. This section details specific perils and circumstances that may not be covered, such as certain types of water damage or exclusions related to maintenance issues. Option E, customer service policy, and Option C, consumer complaints, do not provide specific coverage information. Option D, agent credentials, is important but does not determine coverage details. Question 114. Which statement regarding Hawaii's regulation of insurance fraud is correct? A. Insurance fraud is only a civil offense, not a criminal offense. B. Insurance fraud investigations are conducted by private agencies. C. Hawaii does not have specific laws addressing insurance fraud. D. Insurance fraud penalties may include fines and imprisonment. Answer: D. Insurance fraud penalties may include fines and imprisonment. In Hawaii, insurance fraud is a serious offense that may result in criminal charges, fines, and imprisonment. The state has specific laws and regulations to prevent, detect, and prosecute instances of insurance fraud, which can involve misleading statements, false claims, or deceptive practices aimed at obtaining insurance benefits unlawfully. Option A is incorrect, as insurance fraud can result in both civil and criminal penalties. Option B is incorrect, as fraud investigations are typically conducted by law enforcement and insurance regulatory agencies. Option C is incorrect, as Hawaii, like other states, has laws addressing insurance fraud. Question 115. Which of the following is typically covered under Hawaii's commercial liability insurance policies: personal and advertising injury coverage? A. Damage to company vehicles in accidents. B. Legal defense costs in liability lawsuits. C. Injury arising from slander or defamation. D. Theft of company property by an employee. Answer: C. Injury arising from slander or defamation. In Hawaii, commercial liability insurance includes personal and advertising injury coverage, which protects businesses from claims of non-physical injuries such as slander, defamation, copyright infringement, or invasion of privacy. This coverage extends to legal defense costs and damages awarded in lawsuits alleging harm due to advertising or personal actions that cause reputational harm. Option was or damage to company vehicles is typically covered under commercial auto insurance. Option B, legal defense costs, is covered under general liability insurance. Option D, theft of company property, may require separate crime insurance coverage. Question 116, scenario. Mary Johnson, a business owner in Hawaii, faces a liability lawsuit due to an employee's actions that caused harm to a third party. Mary believes the lawsuit is frivolous and without merit. What should Mary do under Hawaii's insurance regulations? A. Refuse to respond to the lawsuit. B. Immediately settle the lawsuit to avoid legal costs. C. Cooperate with the insurer and provide necessary information. D. Retaliate against the third party for filing the lawsuit. Answer: C. Cooperate with the insurer and provide necessary information. In Hawaii, Mary Johnson should cooperate with her insurance company and provide necessary information to defend against the liability lawsuit. This includes responding to legal proceedings, providing documentation, and working with the insurer's legal counsel to assess the validity of the claims. Options refusing to respond can result in default judgment against Mary. Option B, immediate settlement may not be advisable without evaluating the merits of the lawsuit. Option D, retaliating against the third party, is illegal and could lead to further legal consequences. Question 117. Which statement regarding Hawaii's regulation of insurance producer compensation is correct? A. Insurance producers are prohibited from receiving commissions on policy sales. B. Compensation arrangements between insurers and producers must be disclosed to clients. C. Insurance producers are exempt from reporting their earnings to regulatory authorities. D. Insurance producers must set their own commission rates independently. Answer: B. Compensation arrangements between insurers and producers must be disclosed to clients. In Hawaii, insurance producers are required to disclose compensation arrangements, including commissions and fees, to clients before selling insurance policies. This transparency ensures that clients are aware of how producers are compensated for their services and helps prevent conflicts of interest. Option A is incorrect, as insurance producers typically earn commissions on policy sales. Option C is incorrect, as producers are required to comply with reporting requirements to regulatory authorities. Option D is incorrect, as commission rates are usually set by insurers, not producers independently. Question 118. Which of the following is typically covered under Hawaii's commercial property insurance policies? Business income, business interruption coverage. A. Repair costs for damaged company vehicles. B. Legal defense costs in liability lawsuits. C. Loss of income due to fire damage to the insured property. D. Theft of inventory by an employee. Answer: C. Loss of income due to fire damage to the insured property. In Hawaii, commercial property insurance often includes business income coverage, also known as business interruption coverage, which compensates businesses for lost income and operating expenses when a covered peril, such as fire, damages the insured property and disrupts business operations. This coverage helps businesses recover financially during the restoration period following a covered loss. Option equals repair costs for company vehicles is typically covered under commercial auto insurance. Option B, legal defense costs, is covered under general liability insurance. Option D, theft of inventory, may require separate crime insurance coverage. Question 119. Scenario: David Lee, a property owner in Hawaii, leases office space to several businesses. During a severe storm, strong winds cause roof damage to the leased office building, affecting multiple tenants. Which insurance coverage would typically respond to this situation? A. Landlord insurance. B. Tenant insurance. C. Business income insurance. D. Boiler and machinery insurance. Answer: A. Landlord insurance. In Hawaii, landlord insurance typically covers property owners for damages to rental properties, including structural damage to buildings caused by covered perils such as storms. This coverage includes repairs to the roof and other parts of the building, ensuring that property owners like David Lee are protected from financial losses due to damage from windstorms or other perils. Option B, tenant insurance, covers tenants' personal property and liability, not structural damage to the building. Option C, business income insurance, covers lost income due to interruptions in business operations. Option D, boiler and machinery insurance, covers specific equipment, not building structures. Question 120. Which statement regarding Hawaii's regulation of insurance policy renewals is correct? A. Insurers can automatically renew policies without policyholder consent. B. Policyholders must be notified of renewal terms and premium changes. C. Policy renewals are exempt from state regulatory oversight. D. Insurers are required to reduce premiums upon policy renewal. Answer: B. Policyholders must be notified of renewal terms and premium changes. In Hawaii, insurers are required to notify policyholders of renewal terms, including any changes in coverage, deductibles, or premiums, before renewing insurance policies. This notification ensures that policyholders are informed about their insurance coverage and can make informed decisions regarding policy renewal. Option A is incorrect, as policyholder consent is typically required for automatic renewals. Option C is incorrect, as policy renewals are subject to state regulatory oversight. Option D is incorrect, as insurers are not required to reduce premiums upon policy renewal unless specified by competitive market conditions or regulatory changes.